Rupesh Shankhe joins us, Vice President Institutional Research with Elara, and let's connect with him to discuss the fortunes of the power sector. And Harry Dhaul is also ready to understand that what is happening in the power sector. Harry, let me start the discussion with you. In your understanding, why has the power demand shot up? Our understanding is that power demand is at a peak and there is a huge mismatch between what the demand in the evening is versus in the day.
Well, simple. The demand is rising as industry and commerce are thriving and is going to continue to rise. The immediate spike I would attribute is to the changes in the weather patterns. We've seen a lot of rainfall deficits happening in various parts of the country. And this is the result of climate change. But it will ultimately have to be adjusted as we understand our understanding of the change in weather patterns and climate change improve. If you notice, there have been certain parts of the world you had heat waves, which have been unprecedented. Other parts of India, for example, where a fantastic amount of rains and floods. Other parts of India where there was a huge amount of rain last month, and then in August, there's hardly anything. So the demand for power is rising because people are still trying to do some agriculture. So the agricultural pump set load is going up, air conditioning load is going up. And as it is, industry itself is booming. So there's a tremendous demand increase all around. Coming to the second point, regarding peak power, if I remember, that's what you asked me. The consumption or the requirement of electricity in the evening peak hours is much more than, say, in the middle of the night. Whereas your generating stations typically run 24/7. So obviously, with the increase in demand coming up, evening peak rates are going to be higher. And that's normal and logical, and that's how market forces work. So there is going to be more and more tendency towards time of day metering as we go along across the country. And I think the government is doing a superb job in implementing schemes like smart meters, like time of day metering. They've also started a scheme called market coupling for the power exchanges. So we are coming to a stage where the consumer, even a household consumer in times to come, will be able to decide where to buy his power from and at what cost.
Rupesh, just want to get you in. I mean, there's no taking away from the fact, like Harry as well highlighted, that demand is robust. But does it justify what you're seeing on the power sector, on the bourses, the kind of up move that you've already seen in the stock prices? Or do you think this is just the beginning of it all?
Yeah, good morning. See, if you look at the re-rating which has happened in the last 6 to 9 months, the power stocks EV/EBITDA has gone up from around 7 EV/EBITDA multiple to now close to 10x. Look at the price to book value, which was trading at below 1 times price to book value, closely trading at 1.3 times price to book value. So certainly the valuation re-rating has happened because this sector where we have seen the cash flow visibility, the return on equity is based on CRC regulation. So these companies are generating close to 17% kind of ROE. And because of green transition, existing conventional players are now getting benefit. Earlier thought process that the unlisted renewable energy will get benefit, but now the conventional player like NTPC, NHPC, Torrent Power, JSW Energy are entering in a big way on the green transition. So they are getting multiple on the price to book value, and still it is a historical discount to what we have observed in 2005 to 2009. Even adjusted for return on equity, I think a valuation re-rating has happened. And going ahead next 7-8 years, we can see the higher visibility on the growth, better capital allocation, and that will drive the re-rating ahead also.
I just wanted to get in your sense as well, Harry, in terms of the kind of steps that have been taken by the government, the incentives to the states that have been provided worth 1 lakh crore, etc. There have been changes in the electricity laws, etc. What's been your takeaway on the government's involvement?
I think it's super. You see, please understand, electricity is a fascinating subject. You can't see it, you can't feel it, you can't touch it, you can't smell it, you can't store it. Yet there's a market. Yet it's a part of, very much a part of our lives. And if India has to grow, the power requirements are going to go up. As we move towards the green transition, as my respected friend spoke, the challenge is coming up as well. And therefore a new market. For example, renewable energy is infirm. You don't get it constantly. When the wind blows, you get power. When there's a solar, the sun is shining, you get power, etc., etc. You don't get the sun shining at night and so on. But there's a demand for power. So coming up with these kind of transitions also is creating a new market. For example, for forecasting. For example, you need to have grid management. You need to have all kinds of new, if I may use the word, AI-powered programs or issues which then allow you to anticipate how much will be the consumer demand. So this is going to then again generate a lot of interest and a lot of jobs, a lot of new markets, which will then come as a fallout of our green transition. There are challenges, of course. For example, the other day I spoke about smart meters. I think the challenges like cybersecurity and all of that, but I think we should be able to overcome those. So it's a very exciting time for us in India with our demand in growth and our economic growth going on the way it is. Nothing's going to happen without electricity. So it's very much like, breathing air. But yet nobody knows what electricity is, as I said. So it's very exciting. And I think in times to come, the government is taking a pretty practical approach in trying to, shall I say, issue guidelines and regulations on the way the way the industry should go. And he's right, it's a regulated industry, but then it also secures money for you. I mean, for example, a stock like Tata Power, we used to call it, a stock, for retirement. It's like a retirement stock. You will get your return. It's regulated, but it's secure and it's sure. Demand for power will remain, at least in my lifetime and yours, for sure. Thank you.
Rupesh, ultimately it comes down to a constituency which we are addressing, our viewers who want to invest in power stocks. And there is a whole range of ways in which you can invest in power stocks. You could bet on power utilities. You could bet on companies which are in smart meters. You could bet on finances like PFC, REC. You could bet on companies which essentially would be creating the solar network and would be creating the new renewable network. So in your understanding, Rupesh, which end of the power cycle should one go ahead as a good should invest in?
Definitely, you are right. The entire power system is getting benefit out of the investment that is happening over the next 7 to 8 years. So currently, our installed capacity is 422 gigawatt, and target is to close to 800 gigawatt by 2030. So close to 28 lakh crore kind of investment is there in the entire ecosystem, and all these power equipment companies are getting benefit out of that. Certainly, I think one interesting space that is in the limelight is the hydro space. So we have not seen the growth in the last 20 years, but certainly we have seen many hydro companies like NHPC, HJVN has lined up for strong MOUs and under construction projects. So the regulated equity will go multifold from the current levels and still trading at close to 1 time price to book value and close to 19% ROE. So we'll bet definitely on the NHPC and HJVN from the current levels. And certainly the growth is very much high there in the next 8 to 10 years. In the large cap, I think NTPC still is available at attractive valuation. Certainly, we have seen some sort of re-rating happen. But if you look at the implied price to book value, it's just 1.1 times. And now they are getting benefit of a demand supply mismatch. Also, they are targeting around 60 gigawatt renewable energy. And the RTC benefit will be there for the conventional players because they are getting benefit of a low interest cost and a strong balance sheet. I think the market still we see upside left in the NTPC, considering the growth which is there visible, as well as the valuation they are trading at very, very reasonable levels. So these companies are there. Other companies like CESC is trading at below 1 times price to book value. They were not aggressive on the renewable energy front, but I think going ahead, they will also take some look at renewable energy in their portfolio. So certainly that stock looking good. And other ancillary companies like PFC, REC has a great disbursement opportunity going ahead. They are also trading at a very, very attractive valuation. Then we have other equipment players in the wind sector. This entire power system will get benefit, but will remain top on the NTPC, NHPC, CESC, and HJVN at this current valuation.
All right, gonna let you go on that note. Harry, appreciate your time, and Rupesh, thank you so much for joining in. So getting a 360-degree view on the overall power sector as well, the demand trends and what the outlook is from the government standpoint, some of the concerns and the positive triggers.